The most basic stock picking mistake people make is this. They look at too few stocks. They pick them by name recognition. There's about 10,000 companies out there. I'm just scrolling through my approved filtered list, which is what my clients get each month. And out of that 10,000, we will narrow that down to the best 100. Okay, that's filtering. For those people who say, well, I only invest in British stocks, what are you, racist or something? What you should be doing is filtering by the valuation of a company and its growth, such as revenue growth, and its dividend yields and its cash flow, because companies have three sets of accounts. You know that, don't you? Balance sheet, profit and loss, and cash flow. So you should be looking at all three. You'd be stupid only to look at one thing. Don't forget, every single company you consider buying shares in, you're actually asking a group of individuals who run that company to look after your retirement or your children's inheritance. Even if you're starting off with $10,000 or $100,000, you will eventually, presumably, add more money. So if you decide only to look at the CVs or names of 10 companies or ones that you read about in a magazine, then you are effectively saying, here, take my money. I'm going to just gamble and throw darts at a dartboard, which is why most people are rubbish at investing. And if you are not going to filter through 10,000 companies to narrow it down through a simple Excel spreadsheet down to the top 100, I've marked in green the ones which meet my criteria, but they've got to be green right across the board. They can't just be green on one and two columns. They've got to be green on the Alpesh value growth rating, and one won't do it. None of these names, by the way, make the cut. Okay, so unless you're going to do that, don't invest. You're just gambling. And for those of you who think, yeah, well, I'll just do the S&P 500. Yeah, it's better than nothing. But it dropped, what, 20% last year? Can you withhold that drop? I'm sure you think you can. Could you? Really? Wouldn't you be better off saying, well, actually, I'll just go into cash when the time is right, like last year, and buy individual stocks when things look better based on the value, growth, income, cash flow, momentum, because we know all of these factors affect stock price movements. Like I said, if you can't do it, then don't do it. If you can, then the right way to do it is look at those 10,000 companies. Every single one of these you see on screen, they didn't make the cut. Every single one of those will not go into my portfolio. I can tell you that now. All right? Do it right or don't do it at all. Or I think there's a Yoda quote in there somewhere. Do or do not. There is no try.